Hello, welcome to another update from Ashworth Wealth Weekly Market Update. As I was reading over the notes for the information that we like to put into these things, it brought to mind a joke that I've heard in my 17 years of time in this industry. I've heard it many, many times and in many, many different variations, but the basic joke is that economists have predicted 9 out of the last 5 recessions. And here we are again in a year when recessions have been predicted over and over and over, and it has not manifested itself so far. We've had quite a few interesting things that have happened this year. If you think back to Q1 of this year with the regional banking crisis, if you think, of course, to all of the rate hikes that have happened and all of the different things that should, in theory, be propelling us towards a recession or at least a slowed down economy, but that just hasn't happened up to this point. That said, it could. We certainly don't know when the next recession is going to hit, but I also think that it's important to point out and just to remind ourselves that the stock market and the economy are not necessarily the same thing. And stock market performance does not follow economic performance always. The stock market is a forward-thinking element trying to predict what the future is going to hold, whereas recessions or economic output, when we notice that we're in a recession, we've already been in a recession by the time we even know that that has happened. That being said, we're analyzing Q3 data here and looking at what is actually happening in the economy. As you may know, the US economy is heavily driven by consumption, by consumerism, by just us buying and selling things. And that was strong in Q3 of this year. 2.1% real growth, 1.3% in inventories, just in goods tied up in various inventories and businesses. Residential investment was still a positive number, which is interesting, just given all the doom and gloom and the difficulties with interest rates that are out there. Government spending was up a little bit, shocking that it's only up 0.2%. Non-residential investment, however, was down, as well as net exports being down. So what does this point to? JP Morgan Chase, where we pull some of this information, is pointing to the fact that the underlying factors of the economy might not be as strong as we think. Other economists are predicting that the economy is actually even more strong than we think it is. So, of course, the truth probably lies somewhere in between. What we're looking for and what we're trying to accomplish by giving you this information on a weekly basis is just to have our clients and the people that we would love to become clients who might be looking at this. We want to have you just be thinking about how do we strengthen our portfolios. Of course, that's what we're looking at on a regular basis. And what it comes down to is making sure that we have a well-diversified portfolio that touches on many different asset classes across the world so that we can withstand the various things that are happening in regions and in different sectors of the economy. And that's what we focus on as we're building out your portfolios and as we are having our meetings and deciding if we're going to make any adjustments or changes. So we're not necessarily worried about what's happening week to week, even though we like to give you these updates. What we're really concerned about is how do we make sure that your portfolios work for your plan for the long haul, for the 10, 20, 30-year time that we get to work with you. So in the meantime, what we're looking for is to see what the Fed is going to do in December. Today is November 2nd, and the last 2 days of stock market activity have been fantastic. Big growth in the last couple of days. The last few months, not quite as much, but the Fed for now looks like they're going to be holding off on any additional rate hikes for the near future. So we'll keep an eye on those things. We'll keep giving you information as we see it being useful. And if there is anything in particular that you would like us to hone in on or to be more specific on, please let us know. As always, please feel free to share this with anybody that you see that it could benefit. And we really do appreciate being able to work with each of our clients and each of the people that are viewing this. So thank you for taking the time and have a wonderful week. We'll be back in touch.